We are back. This is Coach Darius D. Brown. And before we even get started, guys, make sure you guys like, subscribe, share with at least 5 people so we can continue to push the envelope and changing lives and shifting perspectives. But without further ado, we have a very special guest, Mr. Rick Guerrero. How you doing, brother?
I'm living the dream, man. Thanks for having me.
Absolutely, absolutely. Listen, guys, I'm going to actually let Rick introduce himself as far as who he is, what he does, and then we'll go from there.
Absolutely. Well, thanks for having me. My name is Rick. I work with a mortgage firm. I am a producing sales leader, and what that entails is I'm a mortgage advisor. So at heart, my job is, or my dream is, to help families achieve home ownership and build wealth through home ownership. But in addition, as a sales leader, I hire, recruit loan officers to be on my team, train them, coach them, and help them achieve their goals in helping families build wealth through home ownership. So, bigger picture, trying to help families get into homes to build wealth through home ownership.
That's good. That's awesome. That's awesome. Yeah, man, we've had so many people that have reached out. As you know, we work alongside Rick with unqualified buyers, right? But we've had so many people asking.
I would say not qualified yet.
Not qualified,
Not qualified
right?
yet.
Well, unqualified, right? Like
Yeah.
clients who are unqualified at the time, and they're looking to get to the closing table. They're looking to obtain home ownership, but they don't have the right guidance.
Right.
So they're reaching out and they're like, "Hey, listen, this is our first time even going through the initial home buying process. Where do we start?" This is the man with the plan. We've been working with Rick for the last couple of years, and when I tell you, him and his team are dynamic when it comes to not only ensuring that you get to the closing table, but you do it the right way.
Well, and I think that comes from also knowing your strengths, what you're good at and what you're not. Right? In the lending industry, unfortunately, so many loan officers try to be everything for everybody. And you can't do that. I mean, you can, but you can only go so far, right? If you look at any sport, like Tom Brady, Steph Curry, they're not playing every position.
Correct.
They're passing the ball and they have a team. So I feel it's important as a mortgage advisor, like, why am I going to try to advise somebody on credit? Like, I can, but I'm not going to be as good at it as somebody that's in it every single day all the time.
So good.
So
good.
So why not bring in the experts? And then I also feel like that makes me look stronger because, like, yes, other loan officer will help you do that, but I got a team of experts that are going to be dedicated to you at no additional charge because that's my value proposition of my team.
I love it. Man, so Rick is already diving into some of our key points today, but I'm so glad that you mentioned that as far as like real estate professionals have to understand the importance of leveraging their resources, leveraging their ecosystem. It's just imperative, especially in the economic climate that we're in. So let's get started, man. Explain your journey. How did Rick get into the mortgage industry?
That's a good question. So in high school, college, I was working in retail. I worked for a clothing store called the Men's Warehouse.
Nice.
After Hurricane Katrina, I was living in Houston. After Hurricane Katrina, they asked me to relocate to New Orleans and manage a retail store there. I did. Met an amazing lady, my wife, Lisa, and she was going to school at Tulane. Her goal and dream was to work in the public health field. So epidemiologist, working on vaccines, viruses. So I thought to myself, I hit the jackpot. I'm going to marry her. I'm going to be a stay-at-home husband. Live the life, right?
Yeah,
like this. Come to find out, government workers do not make that much money. So I had to work. So relocating to New Orleans, she got a job in Atlanta, the CDC. There's a few places in the world that she could work. And living in Atlanta, relocating, I couldn't find a job. So I decided to roll the dice on myself, and I got into insurance, and I opened up a State Farm agency. I got into the State Farm program, fantastic program. They helped me build a business, and I built a business, and it was doing great. I was insurance licensed, financial advising licensed, Series 6, Series 6.3, and I was networking my butt off. You know, insurance is one of those businesses where it's fear of influence. So I was networking my butt off, going to every event, because I knew nobody in Atlanta. Right. And through that, I started to carve out a niche through real estate. And I started visiting the mortgage offices every week, connecting with loan officers, and I was getting 120 policies a month through loan officers. So I just went all in on that vertical. And before you knew it, they were having me come to the offices, teach classes. The managers would ask me to teach their loan officers to be like me, pretty much just go out and prospect, not be afraid.
Got it.
And then before long, these offers came in. So I took one, joined a mortgage company, loved it. And I've been in that now for 12 years, learned a lot of hard lessons from just putting in the work, doing the thing, making mistakes. And now I'm in a position now where I have a partner and we lead our own team. And we're having a lot of success.
I love it. Definitely. What are the key lessons to be a top producing sales leader?
You have to do more than everybody else. Like you can't just do what everybody else is doing because that puts you as average, right? In order to be exceptional, in order to be a top producer, you got to do what top producers do. And top producers don't stop. Top producer don't stop learning, don't stop hustling, don't stop trying, don't stop making more relationships, don't stop evolving.
Right.
You know, we were talking earlier before this podcast. Like I watch a lot of videos on YouTube on Kobe Bryant, on Tom Brady, because like these are guys. Kobe Bryant, if you look at him, he wasn't really super tall, wasn't very fast, didn't have big hands. Like he did not really have all the tangibles that teams look for when they're drafting.
Right.
But like just like Tom Brady, he had the intangible of mindset and hard work.
Correct.
And that's what top producers do, is that they find a way. And they find a way because they just don't quit until they get what they're looking for. And they're always looking to make more connections and learn. And similar to that, like why we're here today. Right. You and I connected years back, always traded ideas, always traded things, even though there wasn't anything in for it for you at that moment or in for it for me in that moment. We always shared and collaborated and helped lift each other up. And I think that's another component is the circle of people you surround yourself with is huge.
Good. That's so good. Right? That's so good.
So like the circle, if you surround yourself with people that get jealous or like don't cheer for you when you're winning, that's a bad circle.
It's a bad circle.
You know?
I call it, I don't say it's a circle, it's a cage.
Yes.
Yeah.
Yeah. I have this office I've been working my butt off to get into and get business from. And old Rick, I brought my insurance partner, brought Jocana into the office to meet with the agents. And after that meeting, the agents reached out to her and said, hey, we want you to come to our team meeting Monday. Old Rick, jealous Rick would have been like, that's effed up. How come they invited her and not me, right? But new Rick, immediately I called her up. It was like, girl, awesome job, great job, you're crushing it, and just cheered for her because like that's awesome accomplishment.
For sure.
And I think that you got to have that mindset, even though you want to get to the top, you got to help others get to the top too, because man, if you surround yourself with the right people, you'll all raise together.
That's so good, man. That's so good. Like when you're ascending to newer heights, it's important. Like the famous saying, you don't go as far as your dream, you go as far as your team.
Yeah.
The right team, right? Because there's been times where we've had people on our team, but they were not conducive to the bottom line, to the objective, the mission. And it was just like we were being delayed and the process was slowing up because we're like, okay, you don't understand the mission. You don't understand the objective here. And sometimes you have to part ways, right, for the betterment of the objective and the mission. So that's good, man. What separates average loan officers from elite producers?
Doing the work that they don't like doing. So, I think for anybody watching, a better example would be is like what separates the average person from like an elite athlete. Well, the elite athlete, when they wake up and they don't want to get in the gym or they don't want to do the stuff because they're tired or whatever, they do it anyways. So I think it's discipline is what separates. Doing the activity anyways when you don't want to do it. Doing that one more call. I mean, there's a lot of days where my mindset is I lose a deal, something goes wrong, I don't want to work, I don't want to, and they just shut down for the day. Or, I already made 5 calls today, that's enough. The elite just keep making the dials, keep doing the activity, keep doing the work. And that's what you have to do. You just got to keep doing it until you get to the place that is where you want to get to.
Right.
So keep doing it, keep aligning with great partners. I would also say, like, recognize your strengths and don't try to be everything to everybody all the time.
Can you expound on that, please?
Absolutely.
Please.
So great example. I talk to loan officers all the time, and they tell me that they're advising their clients on credit. Like if they get a client that has a 580 credit score, 540, 480, like they're personally advising them. And like, nothing's wrong with that. That's fine. But the reality is, like, we're not credit experts. Like, many loan officers are not even mortgage experts. Their manager helps them. Why would you not want to get an expert involved to help your client, so that way you can focus on what you do, mortgages, prospecting. So I had a client last week, credit score is 580. Technically, like, they can get approved for a mortgage, but when we were running a US, we weren't getting an approved eligible because of the debts and the things on their credit report. Now, I can advise them what to do. That's going to take me 30 minutes to 45 minutes, right?
Right.
Well, that same 30 to 45 minutes, I could spend prospecting, which brings me more business or helps me get to the level I want to get to.
Very good.
So I leverage my partners. I call Jokana up and it's like, hey, here's the situation. Here's where they're at. And then she takes it from there. And I think that separates me because I have a team of professionals versus me trying to do it on my own. And, I make the example, and this might be a terrible example, but it's the best one I know. I was like, you look at OJ. OJ had a team of attorneys.
Right.
Like the dream team, they called him. He had 6 different attorneys, and every different attorney did different things.
Correct.
He could have had one, but he had a team. And like, the outcome is the outcome, but the outcome's the outcome because he was very strategic in having that outcome.
That's so good.
So, why try to do it all on your own? It allows me to, and same thing with insurance. I have insurance experts. I have financial advisors. I have CPAs because I can advise a little bit, but bring in the experts and focus on what I do. And I can go further.
That's so good. Yeah. I tell my mentees, my students, even our clients, I'm like, you want to focus when you're an entrepreneur or you're in business for yourself or just working for a company, whether you're in corporate America, it's important to understand, like, focus on your strengths and then bring people on. Don't amplify your weaknesses by trying to do it yourself. Focus on your strengths. Bring on a dominant team that has strengths that you may not necessarily have, and allow them to be able to focus on their strengths and come together as a collective. And you'll be surprised how far you all can go. So that's good. That's real good. Now, we're going to get into the logistics and the specifics on real estate. Okay. Why does real estate matter? Why home ownership and commercial real estate? Why are these two components still powerful in today's economic landscape?
Well, you look at, no matter what, everyone needs to live and sleep somewhere, right? So at the end of the day, we all got to live and sleep somewhere. If you want to live, if you don't want to own it, perfectly fine. You can live and sleep in a house that somebody else owns. And that house that somebody else owns, they have a mortgage on it. You're paying their mortgage. So if I bought a house for $200,000 and I rent it to you and you pay $1,500 a month in rent, my mortgage on that house is probably $900. So I'm profiting $600 a month off of you. But I mean, look, that $600 probably going to go to maintenance, repairs. I may break even, I may be profitable. But over 30 years, you're going to pay off my debt. So think of it like I'm borrowing money from the bank. I'm borrowing $200,000, but I'm not paying it back. You're paying it back for me. And then in 30 years, when that loan is paid off, that home now is not worth $200,000. It's worth $900,000, $1 million. So I am buying an asset. It's almost like I'm buying stock, but I'm not buying the stock with my money. I'm having somebody else pay for that stock. And then in 30 years, when I'm ready to cash out, that I'm going to have a 4 to 5% appreciation on top of the equity, on top of the paying off the mortgage.
Wow. So it's safe to say investing, whether you're buying a home for you and your family or just simply investing in real estate, is probably the smartest investment that you could possibly make.
Yeah, absolutely. And the fact from like buying with your family, I use the example as an investor, but buying for your family, like if you're renting, that's $1,500 a month you're losing that you get nothing for. So by owning, your home's going to be the biggest asset of your life for most people. So by owning, you're paying for your roof over your head, but you're also building like a little retirement nest egg in that home. I was going to say, you look at also the increase in rents. Rents are going to continue to increase. So like I have a client I spoke to yesterday, they pay $4,000 a month in rent.
Wow.
And for $4,000 a month, you can get a pretty big house,
For sure. Yeah.
especially in Atlanta,
Yeah.
but maybe not in California. But
Let me ask you this: do you feel people are renting because of convenience, or they just are misinformed?
I think misinformed on a lot of things. On a lot of the components into what it takes to get into home ownership. So, like the client I spoke to yesterday, he's like, "Yeah, I always thought I needed 20% down, but as I've been doing research, I learned I don't."
Did you kind of go conventional?
I mean, you can go FHA 3.5% down.
Yeah.
But as a matter of fact, his wife was a veteran. So if veterans VA, it's 0% down.
Yeah.
And but he was unaware of that. So many people think they need 20% down, or they think, well, I need 20% down to avoid the mortgage insurance. So I'm gonna
PMI.
wait. Yeah, I'm gonna avoid the mortgage insurance. So I'm gonna wait. Well, while you're waiting, prices of homes continue to rise 4.5% a year, if not more, and you're waiting to save $100 a month versus you're blowing $4,000 a month in that example.
Correct. No, you're right. That's a great way to look at it. I mean, it's perspective, but it's professionals like you in the space to educate and guide your client.
But that same individual, and like I'm guilty of it too, every time the new iPhone comes out, we go and buy it.
For sure, yeah.
And does that iPhone value increase over the years? It didn't.
Why not just buy stock,
Right.
Apple stock?
Right.
You're going to buy the phone. Why not be a part owner of Apple?
Right.
It's perspective, I think, and that's where it comes from. I'm just be controversial. This is keeping it real with the Browns. Before we continue, make sure you guys like, subscribe. We'll have Rick's details in the description below, so make sure you guys, if you're looking to be a first-time home buyer, second-time home buyer, make sure you guys tap in with Rick. He's a professional. He loves what he does, and he loves to serve his clients. But I'm going to say something controversial here, and it's, a lot of people, they still have this poverty mindset, right? This mindset of thinking that it's not attainable, or they just simply can't have it. And it's just simply not true. Me and my wife bought our first home at 25 years old, right? And a lot of people are looking like, how did you guys do it? Well, number one, we knew that we could attain it. And number two, we knew that we deserved it. And this is one of the reasons why you were saying earlier the importance of having the right people in your proximity. I think that's very important, and who you're getting your information from. But let's go deeper into this thing. Yeah. Do you recommend, if someone is saying, you know what, Rick, I want to start building up my wealth portfolio, and would you recommend for them to invest in a single door or like multifamily, like starting like duplex, quadruplex?
It just depends on their particular situation. I think what we want to do is sit down, understand their long-term investment strategies, how much assets they have, and kind of look at the total picture.
Okay.
Me personally, like I have 7 properties. I just recently bought my first duplex. So like my first 6 were single doors. Duplexes are great because you have one property and 2 different revenues coming in.
Right.
So it's all great. It's just going to depend on the market, the cost, depending on where you buy that duplex or multiple door, multi-unit. It could be very pricey. It could be $1 million. And a lot of people don't have that resource to buy into that. So I would say that the most important part, just like running a business, is having a business plan. Here's my goal. Here's the activities I'm going to do to get to my goal. Here's what I need to do to do those activities.
Got it. Why do you feel what is one thing buyers misunderstand when it comes to the timing of the market?
It's a good question. It's a very complex question. My opinion is buyers are too stuck on the interest rate.
Can you say that one more time for the people in the back, please?
But buyers are too stuck on the interest rate. So right now, I don't know exactly where the rates are, but let's say I know
6%.
Yeah, 6%. Let's say it's 6.5%. Right? If you look at historically, like 15 years ago, they were like 7 or 8. Now, what happened was during the COVID years, we had a mass pandemic. We were in an economic collapse. So the government came in and gave us extra low interest rates to like help us get out of that. And people started to perceive that as like, oh, this is the norm. It's not. We were in a catastrophic state. So people are like, I'm going to wait for them to come back down. They're not. 6% is a great rate. However, let's say they do, hypothetically, let's say they do come down. Let's say they come back down to 4.5%. There are millions of Americans right now waiting for those interest rates to drop. So if you have a house for sale for $300,000 right now in this market, you're getting 1 or 2 offers on it. If all of a sudden millions of Americans start coming in to buy houses and you're getting 20 offers, are you going to sell it for the same price?
No.
What are you going to drop the price?
Let me increase it.
You're going to increase it.
Yeah.
Because you have more people.
Yeah.
And you're going to say, give me your best offer. Someone's going to offer 330, 350, 370. And they're going to keep bidding until they want to stop bidding.
Wow.
And then you're going to say, I sold it for 380.
Wow.
So you sold it for $80,000 more or whatever, more. They're getting a lower rate, but at the end, that monthly payment is more.
Makes sense. Yeah.
The monthly payment is more. Now, you buy that house today, there's not a lot of offers. I can negotiate closing costs. You pay my closing cost. I buy that house, $300,000 house with a 3.5% down FHA loan. What is that, like $11,000 down payment?
Right.
Closing costs are an additional $12,000. So we'll say we're all in at $22,000, $23,000.
Yeah, meet in the middle somewhere.
$23,000.
Yeah.
I got to pay the down payment no matter what.
Correct.
But instead of paying the $23,000, since there's not a lot of offers on it, I can get you to cover the closing cost, the $12,000. I only got to come to the table with $11,000. Okay. And next year, 2 years when rates drop, I can refinance, get a better rate. So option one, buy today, a little bit higher rate, come to the table with less money, refinance down the road. Option two, wait, price goes up, I'm bidding, I got to pay more, and I get no help with the closing costs. My mortgage, so my upfront money is more, and my mortgage payment is more.
Wow.
And that is the biggest misconception that like I battle with every day.
Wow. What's broken in the mortgage space right now?
Dude, I don't know if we have much time. Regulation. I think that there's several things that could be improved on. The credit models, accessibility, some of these grants and down payment programs. I think the mortgage industry is getting much better at offering unique products out there to help more people that are self-employed or have a lot of assets but might not be able to document it because of their employment. So that's improving. I think probably the biggest thing that's broken is honestly the people that are working in the industry.
Sheesh.
We're an industry where probably the average loan officer is like in their late 50s, early 60s, and like just in different places of their career where like they don't have to really learn or evolve and get better. A lot of them are very sharp, very good, but just as an industry, we need to get better at bringing in youth, and we don't really have ways to train those. We don't have training programs. We don't get salaries. We're commissioned only on the loans we sell. So there's not a lot of companies that offer programs to train new people up. You just got to kind of come in and get your butt kicked for a while until you learn.
Got it. Man, this is some valuable information. If you guys are receiving some value, make sure you guys drop some fire signs below in the comment section, man. Again, we're going to have Rick's information in the description below, so make sure you guys tap in with Rick because he is a professional at what he does. Now, Rick, what are some common mistakes loan officers and buyers make?
Not working with a credit repair person. Biggest mistake number one. Like, you need to have that team, and we talked about this several times.
Is that the question that you guys typically ask someone that's looking to purchase? What are some probing questions you ask a client that's looking to purchase?
So the probing questions I'll usually ask is, how much home are you looking to purchase? What would you want your monthly payment to be? What does your time frame look like? What part of town are you looking for? How much money do you have saved for a down payment? And then we have a mortgage application we take so that we can get them approved. And then once they take the application, we ask for some documentation, 2 years W-2s, 2 months bank statements, 2 most recent pay stubs, so that we can qualify their income and balance their debt to income. So that's real kind of the process for getting pre-approved. I'm not sure if that was quite the question.
Got it. But we missed one thing, and it's credit, right?
The credit is huge. That's the most important part.
Yeah.
Because like you could have really good credit, but you're going to have a lot of
Yeah, DTI is through the roof, and people miss that. Again, we're, of course, my wife and I, we're in the credit, but so many people, we did when we bought our first home, we were so oblivious to the fact that, oh, okay, we bought our home with a 580 credit score at the time. At that time, this is 2017 though, but it was one of those things where when they were like, man, you guys, debt is super high. Like, but again, we ended up actually refinancing 6 months after we purchased because we were such in a downside up spiral. But a lot of people miss that. What is some advice that you would give a person that is looking to purchase, but their DTI is just through the roof?
You got to pay off that debt. I would say, let me take it a step forward. The advice I would give anybody that wants to buy a home, maybe you graduate college, don't buy the car. Don't buy the car first, right? You know, I'll have teachers, I'll have people that make 40, 50,000, and they drive like a Mercedes or a BMW. They have a $900 car payment.
Wow.
$1,100 car payment, that knocks your DTI out. So I would say if your goal is to buy a home, whatever your goals are in life, like buy the home first before you go buy the car. Save for the home first. I'm not saying don't drive a car. I'm not saying have a bus. I'm just saying don't buy that super expensive luxury car. My first car was a cash car for like $5,000 or $6,000.
Mm-hmm. Same.
And you know that's what my recommendation would be. You get a lot further in life. Now, having said that, I know having a new car is super sexy.
Especially in today's climate. Social media has everybody in a frenzy.
Yeah. But that's the best advice I would give, because you buy that car and something happens with your job. The way we qualify people is based off their income and pay stubs, and we have to see your income. And we have to go a lot of times off of 2-year history. And if your income declines, like we take an average, the declining income isn't good for qualification. So to avoid that, you know, try to not get into that big car payment. That's what I see the most. Now, if you're already in that situation, I think the best thing to do is, you know, have a conversation with someone like myself so we can look at it and come up with a roadmap to get your DTI cleared up and say, let's look at paying these things off first and have a strategy to get you out of it.
Love it. Love it. So, Rick, what's your perspective on loan officers and realtors trying to help their clients clean up their own credit?
You know, there's a lot of really good loan officers and realtors out there that can give a lot of advice, but I would say that percentage is probably small, only because it's hard to be great and really good at everything. I know enough about credit to be dangerous, but for me, why not bring in the expert? Why not bring in the specialist to help with that client, then try to do it yourself? Even if it takes me 30 minutes to like have a conversation and advise on the credit, that's 30 minutes I could spend on income generating activities or activities that can impact my business. I'd rather bring in the specialist and have that specialist have the conversation, because that's all they deal with. Like, they see that every single day. They know the hacks. They know the ways the client can get there faster. And at the end of the day, our goal is to help that client, that family, get into the home at a faster, or a qualify at a faster ability so they can start their search. So in my perspective is bringing the expert to do that. Now, a lot of loan officers and or realtors want to hold on to that and tell me, oh no, I always advise them on the credit. And that's cool. You should, if that's what you want to do, you should definitely do that. Right. I'm just of the perspective that I want to bring in the expert, and I want that expert to focus on that. And I like to have a team of experts and not try to be a know-it-all. I want to focus on my craft and be great at my craft, and have my partners be great at theirs.
That's good. And I feel like you're doing essentially you're doing a disservice to the client, because it's delaying the process when you're trying to do everything yourself. So that's good info.
If I was on trial for murder, I don't want to use the assigned attorney the court assigns. Like, I want to get an expert to get me the experts on murder trials.
Great analogy. I love it a lot. Yeah, man. I mean, like Rick mentioned, we've been working alongside Rick for a couple of years. My wife and our team. It's just a cohesive relationship, right? Like, I'm on the backside of things, so when I'm looking at what they're doing, whether it's Rick hosting a seminar for his team, and we're coming out and we're providing value, and then we're coming together as a collective, we're getting these people to the closing table, but we're creating a seamless process in the interim of that. And that's the goal for your client, not just getting them into home ownership, but ensuring that it's a seamless process, because let's be real, you're a homeowner. We've been through the home buying process. it can be daunting. The home buying process can be daunting. So
A lot of moving parts.
yeah, real estate professionals, just understand, like, you want to ensure that, hey, it's a lot of money to be made out there. We're all here to make money, but we're here to serve the client, right? So good information. All right, Rick. So again, I know you're pressed for time, man. We appreciate you for being on the platform for sure, giving this value and this information. But we have some of our supporters that have sent over some questions, and just want to get your insight and advice on it. All right. So what's the number one mistake buyers make before they ever talk to a lender?
Number one mistake buyers make before they talk to a lender. Talking to a realtor first. Like that's probably the number one mistake.
So they just jump over the hurdle.
100%, 90% of the time, buyers go to the realtor first and not to the lender. Or they the number one mistake is they look at houses first. That's the number one mistake. They look at houses first before talking to a lender. So then I get on the phone with them and I got to be like, so took an application and you don't quite qualify for that $500,000 house you're in love with. And I got to be the bad guy.
You got to shoot down the...
And then they don't want to work with me. So the number one mistake is before you go tour homes, look at a house. So let's say that you're watching this right now. You're going to go out and look at a house right now today before talking to a lender. You love that house. What do you want to do? You want to put in an offer. You can't put an offer in if you're not approved.
Got it. Now, do you stress the importance with your team to ensure that they at least have a pre-approval letter? Like sometimes people start shopping around and then you ask your client, hey, are you working with the current lender? Do you have a pre-approval letter? Because a lot of times they're just looking and they're wasting your realtor's time because they haven't even been pre-approved yet.
That's more on the realtor's play. The realtor should be doing that. Have you been pre-approved yet?
Yeah.
Like why realtors show houses without I get it. Like they do it because if they don't, that buyer will go to somebody else.
Correct.
So it's kind of like a jack system. Like no shade towards the realtors. Like they're doing the best they can. But unfortunately, it's a disservice to the client because if they look at the homes without being pre-approved and they find one they like they're going to have to wait 2 to 3 days to put an offer in, especially if it's on the weekend. Not many lenders are going to be available. It's going to be very hard to pre-approve you on a Saturday because we need documentation. Now, look, there's lenders that do it. I think that's also a red flag because there's many lenders out there that will pre-approve you on your credit and then start collecting the documentation while you're under contract. And that's problematic because many times when we start collecting the documentation and we learn that a lot of clients will tell us, I make $50,000 a year. But then when we get the pay stubs, we're like, oh, well, you actually make 38, but then you have bonus and overtime. And the way or your 1099, and the way we calculate income isn't the same way that you see it.
Correct.
It's a little bit more complex than that. So then we have to tell them like, oh, you actually don't qualify for this home while you're under contract.
Tough.
I've never had to do that because I do it up front, but I've seen it all the time.
Yeah, I can only imagine. Yeah, and it instantly creates discouragement fast. Yeah, so make sure you guys have your ducks in a row. And trust. Yeah. And this is the importance. We even share with our clients, and before sending them over to our team, like people like Rick and other honorable lenders. You want to deal with honorable lenders and realtors that have your best intentions at heart.
Yeah,
simple.
Look up Google reviews. Google them.
Google, right? You guys go to Brown Solution Services, you go to Google, you see almost 5-star. Do your due diligence, right? I always say documentation beats conversation. I don't have to speak about it. It's the proof is in the pudding, right? This is another question. What's the biggest red flag that instantly tells you a buyer isn't ready?
Biggest red flag, buyer isn't ready. So I would want to know a little bit more on that question. Isn't ready in buying? Isn't ready in qualification?
More so, I would say qualification.
I mean, the biggest red flag qualification would be the credit. In my opinion. Like if you ask somebody else, it could be something else. I would say 2 things, credit and money saved, because they got to have the money for the down payment.
So reserves,
right?
Got it.
Those are 2 of the biggest factors. Because like we can get closing costs, we can, but at the end of the day, they still have to pay that down payment fee, and if it's FHA, it's 3.5%. Now they can get a gift to cover that, so that's where I think the credit is probably the number 1 thing. That down payment a little bit on probably number 2 because they might have a family member that will gift them. But those two, I think, would be the most important.
Got it, man. Got it. All right, it's going to probably rattle some feathers. You ready for this one? Who's doing more damage right now? Misinformed buyers or professionals chasing commissions?
It's a good question. And to be clear, I was unaware of any of these questions.
He was not aware. He was not aware.
Make it
I
clear
intentionally didn't send over these questions.
But make it clear that this is all like this rattle fire. I think the biggest thing is misinformed buyers or misinformed people, because the other challenge we have is that, for example, I spoke to this young lady. She was new in her industry, had decent credit. She qualified. We put an offer on a home, and the realtor did an amazing job getting down payment assistance money. I'm sorry, not getting seller credit. So all she was coming to the table with was her 3.5% down, and it was a hell of a deal the realtor negotiated. I was kind of shocked, and she decided to back out because someone got into her ear and talked her out of it. And I'm telling her like, look, I'm not trying to sell you, but this is a really good deal. Like, you're getting your closing costs covered. You're not going to get that in the future. And she's like, yeah, but the rate is too high, or I still got to come with money to pay down payment. And I'm just like mind boggled. Like, what are you expecting? You're expecting for like us to pay you to buy the home? You're expecting so I think that's the biggest damage. Is it's also not just uneducated buyers, but uneducated consumers in the world that are filling other people's heads with misknowledge.
Got it.
Someone could say, well, I bought a house when in my house I paid nothing and my rate was 2%. Well, those were different times.
Understood. All right, man. So we're going to wrap up, man, get you out of here. But this is the last question before we enter our fire round. I have a couple of things on my own I want to ask you. How should realtors, lenders, and credit experts properly collaborate to protect the client?
Love that question. So for me, I tell my realtor partners all the time, if you're going to refer a client to me, don't just give them my number. Don't email them my information. What I want you to do is do a 3-way text introduction, because to me, we're partners. We're all working together to help the family get into the dream home. So I like to have all communication up front. I like to introduce my realtor partners to Jocana, my credit repair specialist. I want them to have a conversation with her. I want them to know her. I want them to know how they work, because there could be instances where they're calling me and I'm not available because I'm here. The realtor can call directly to them. So I like to watch out. I like to keep everybody together and really have a team environment.
I love it. Love it. Yeah, that's good stuff, man. I hope you guys are taking notes, especially
the realtors.
Well, I was going to say realtors, but let's say it's a new realtor, someone that's just now getting in the industry. I mean, I think this would be some helpful information and insight to ensure that you're collaborating with like-minded professionals. All right, man. So, Rick, before you get out of here, we have this thing that we do with our guests. It's called Fire Round, so you can be quick on it. All right? One mortgage myth that needs to die immediately.
You need 20% down.
Got it. Best advice for first-time buyers right now.
Call a lender first before you're looking at homes.
Call a lender first before looking at homes. Or
specifically me.
Got it, yes. Get with Rick. All right, worst financial advice you've ever heard in real estate.
Worst financial advice I've ever heard. That's a tough one. I mean, I think I would go back to you need 20% down, or wait till rates drop.
Wait till rates drop. I will agree 1,000%. Residential or commercial?
Residential. Commercial is a very different, complex animal for most people. It's a great vertical for investors that have a big portfolio, but it's very different business.
Got it. One thing every realtor and loan officer should stop doing today.
Showing houses that are pre-approved.
I love it, man. Any last remarks, anything you want to share with our subscribers, our supporters?
There is, and it might take 3 to 4 minutes, but there's one thing I want to talk about and share, because we talked a lot about that first-time home buyer. We talked a lot about what separates good people from the rest. And I would ask you bought a home. How long ago did you say you bought this home?
2017.
Okay. So when I talk to my first-time home buyers, one of my spills is I say, you're going to be shopping for a mortgage. You're going to be talking to different loan officers. And usually, correct me if this is wrong, when you spoke to your loan officer, you had a conversation, they sent you a link to a website to complete the application, got you pre-approved, and then 2017, you said?
Correct.
You never heard from them again.
No.
And to me, I think that is another challenge we have in our industry, because that person is just someone trying to sell you a loan. No disrespect to them. They did nothing wrong. Like that. That's our industry. And that's where I am trying to do my part to change our industry and be a difference maker. I feel that I need to be your mortgage advisor for life. And I want to meet with you every single year to review your mortgage statement, to make sure that you're following your homestead, to make sure that you're not overpaying on your insurance, to make sure that everything looks aligned. Because as a consumer, you have no idea what you're looking at. Now, you may know because you're in the financial industry, but most consumers have no clue. They get that mortgage statement and they just write the check every month. So I had a client that asked me, they wanted me to take a look at their mortgage statement because it went up $400 a month or $700 a month, and they had no idea why. Maybe it was more than that. But I remember that as I looked at it, I noticed that they were paying $10,000 a year in homeowners insurance. That's absurd. Why do you think that happened? How can someone be paying $10,000 a year in insurance?
Someone dropped the ball on the front end of the process.
Well, many people don't realize, but if you were to miss your insurance payment.
Oh, yes.
Okay. No matter State Farm, Allstate, Progressive, I'm not trying to throw anybody in the bus, but whoever it is. If you missed your insurance payment or something happens where they don't get paid, they drop you. Okay? And when they drop you, the mortgage company gets a letter that you are no longer insured by them. Well, the mortgage insurance requires you to have insurance because if the house burns down, they want to make sure they get their money back. So what the mortgage insurance does is they do force-placed insurance through like a third party, through one of their companies.
Got it.
And they charge $10,000 a year.
Sheesh.
Maybe not $10,000 every time, but they're going to charge like 3 to 4 times more than an insurance company would. Right. Why? Because they're not in the business of doing insurance. So they're with insurance is people that pull their money together. That's not their business. So they're going to charge you at a premium, and this consumer had no idea.
Wow.
So I caught it, immediately saved her $7,000 plus a year. But that's why I'm just so adamant that doing these annual mortgage reviews every single year with my clients. If you are a high net worth individual and you're watching this, you probably have stocks, bonds, financial advisor, right? How often do you meet with your financial advisor?
Once a quarter, if that.
Once a quarter, but at least once a year.
Yeah.
For most Americans, what is the largest asset they own?
Most Americans, nothing.
Well, their home.
They were the home, yeah.
For most homeowners.
Yeah, homeowners. Okay, yeah.
For most homeowners, what's the largest asset they have? Their home. So if that's the largest asset they own, why aren't they meeting somebody to talk about it every year? So that's what I'm really passionate about. So if you're watching this and you're a homeowner and no one has ever reached out to you and had an annual review, I will offer free annual reviews to anybody watching this.
Wow. Okay.
Yeah. I want to help everybody make sure they're saving money. The T's and I's are crossed and dotted.
Appreciate that.
This is very important. Like, this is how you truly build wealth, is through home ownership. And my goal is to impact the industry, change the industry, and be a mortgage advisor, not just a loan officer pushing paper and pre-approval letters.
Love it, man. You guys see the indication there, like a man of servitude. And these are the type of professionals that we work with, right? Like, again, dealing with professionals that have your best intentions at heart and want to see you and your family succeed and get into home ownership in 2026. So again, guys, we'll make sure we have Rick's details in the description below. Before we end, make sure you guys like, subscribe, share with someone that's looking to become a homeowner, needs some guidance, don't know where to start. They feel like home ownership may not be for them, but they may just simply be misinformed. We're going to direct you to Rick and his team, and they will be, you will definitely be in good hands. All right. Man, we appreciate you, Rick. We really do, man. Absolutely. Until next time, we'll see you next week.